Hey everyone, I'm going to try and keep this quick because this could easily turn into a half an hour video and I want to try and keep this under 10 minutes. So first of all, I want to clarify my stance on what's going on right now and where I think cryptos are going to go. And long story short, we are nowhere near peak bubble. I mean, I've said this a billion times now. And the reason why Bitcoin isn't going to zero this time round is you have to look at the hash rate. So the global hash rate is basically the thing that drags cryptos up in terms of, well, it drags Bitcoin up in price. And as you can see, the global hash rate is in exponential growth. And typically, Bitcoin trades around 2.5 times the global Bitcoin mining cost. And right now, the global, obviously it depends where you are in the world, but it's between $6,000 to $7,000. So we are at a massive discount compared to that historical average. And the reason why I'm saying that Bitcoin is not going to zero anytime soon is because the hash rate is in exponential growth and it's not even slowing down. The market has dropped 80% since January. Well, it's gone up, I think, 400% during that time. And so this will continue to add positive buoyancy to the price. So will we see a bit of a spike down? Yes, I do believe so. But it's not going to 1,000 or a 0 or some of what the idiots on Twitter are saying. So that's that. Now, if you go to my YouTube channel, yeah, I've got a whole bunch of videos, but there's one I posted in, here we go, this one. It's something I put out in March this year. And
not at all.
It seems to have paused exactly where I wanted it. And basically I was looking at the market and I said, this is probably the most likely scenario what's going to happen. Back then, Bitcoin was, about 9,000. And the reason I said this is because I've seen these compressionary patterns not a billion. I've seen them many times over the last, 14 years of trading. And this is and especially with Bitcoin, it doesn't repeat itself, but it rhymes really, really well. And because Bitcoin is fractal in nature, it does the same pattern over and over again, but each time it just gets bigger and bigger and bigger. And so in March, I was saying that, yeah, this is pretty much what would happen. Bitcoin would continue to get squeezed in this wedge. Then we'll see a capitulation sell-off down to here. I said down to 4,000. I think 4,000 is the lowest, really. And before a V reversal. Now, let's have a look. In fact, let's just compare that to that. It's pretty close. And we're now getting towards the apex of this compression. So we will see a breakout anytime now, as in a meaningful breakout to the up or the downside before the end of November. But I think the first breakout is going to be to the downside. Now, here's why. Just ingrain this picture into your head for the moment, and let's go back in time. And I want to show you something. And it's all about the 50% rule. So the 50% rule in trading stems from a lot of things. I mean, the Fibonacci people use it. Elliott Wave uses it. There's all sorts of different techniques out there. So here's the first real proper sort of compressionary. I wouldn't even say a bear market. Because back in the day, well, I say back in the day, this is only 2016. It didn't last that long. It was basically a month or so. But as I said, it's fractal in nature. So each downturn and then upturn will get bigger and longer. So here's the first one where we see an all-time high. We have a massive smackdown, and then we see a compressionary pattern. What tends to happen is we see a massive sell-off. Can you see this? It basically went from 660 down to about 480 before then V-reversing and then going to crazy highs. Now let's analyze this. I'm just going to check I am. Yeah, it is recording. Okay, so basically from this level here, from 660, and it then busted down to about 483. Divided by 660. Okay, so that was a 26% drop from the So yeah, that was a 26% drop from this point here down to this point here. But then we saw Okay, so that was quite small. Sometimes it's a 40 to 50% drop. But then we see all-time highs being breached. And then what we tend to see is once these local all-time highs are breached, we then see a high in at around 50% of that height there. So this all-time high was 782. In fact, it goes to 1170. So 1173 minus 782, 391 divided by 782. Yeah, that's pretty much almost an exact 50% uplift. And then we see another big pullback. Okay, now these pullbacks after we've breached an all-time high are not one of these compressionary bear markets or pullbacks. This is just normal price action, basically retesting this level. So it retested this level and then went, see ya. And it goes and does its thing. And so we then had another pattern very similar to what we're going through now, where we had an all-time high. We hit 3,000 on the dime, then swiveled. It dropped. It did its first, big crash that always happens, and then we had this compressionary pattern. Now, bear in mind, every single time we get to the apex of these, the whole of Twitter and all the other amateurs out there are going, "Oh, we're all going to the moon." But what always catches people out is this capitulation sell-off. Okay, I call it the capitulation sell-off because down here, everyone is slitting their wrists and then questioning the very existence of cryptos. Now, from basically 2,300, let's work this out. 2,300 minus, what was that? 1761, 539 divided by 2,300. Again, that was a 23% sell-off. So it was pretty. In fact, there's almost identical to the sell-off we just looked at. But then we have to be aware of the 50% rule. So what is 50% from this all-time high? So 50%, so 3,000 times 1.5, 4,500. So at this point here, you can expect a V-reversal and expect the first high to be 4,500 before we have a big sell-off. Oh, hello, 4,500. There we go. Almost hit 4,500, 50%, and then we had this massive sell-off. You can see the spike going down here, and then that is, in fact, that's a mini one. This is one which I'm more interested in. So yeah, even if you did put a sell order in at 4,500, you would have got out here. Yes, you would have lost another $500 roughly, but then we had a big sell-off here. Again, what's it doing? It's coming all the way back to retest this all-time high. Like, this happens all of the time. So let's fast forward to where we are now. As I said, fractal in nature, this is doing its thing. So let's assume we have another 25% sell-off from this level here. Let's call it the 6,000 level. So 6,000 divided by 20, times by 0.25, times 0.25, 1,500 point sell-off. So what this means is, whoopsie daisy, we should, a 25% sell-off brings us around this 4,500 level. Roughly there. And that's if it was to repeat. I'm not going to say it is going to repeat it, but yeah, I really don't see much lower than 4,000. I mean, the absolute base really is 3,000. Look at that level of resistance there. So I do see a relatively high. I'm probably only 60% confident at the moment, but I'm 60% confident that we're going to see at least a move down to the 5,000 level, maybe spiking into the low 4,000s before we then have the V reversal. But what is the 50% level above 19,873? So 19,873 times 1.5, that takes us to 29,809. Here we go, 29,000 roughly, 809. So almost 30,000. So it's around there. So this is why I'm expecting, ignore these lines here, this is why I'm expecting a bit of a sell-off now, and then reaching into all-time highs. So this is why I really don't care, because this is, like this sell-off may seem insignificant, but look at this. I'm expecting it to hit the 30,000 level, 29,000, then pull back down to 20,000 before continuing its rise. So that's what I'm into at the moment. Okay. Bugger, it's 10 minutes. I'm going to continue very quickly though. So yeah, the other day I sent out a text into the group saying, long story short, you need, get out of Ether at 226. If we just zoom in here, it was 223. It was 226 when I posted it anyway. And I said imminently we're going to have a bit of a sell-off with Ether. Ether then crashed. And well done for all of you that followed that move and got out at 225-ish. And then, well, you're now sitting on a good chunk of profit if you were to buy back in now. But I wouldn't buy back in yet. I would stay in True USD or Tether or just Fiat, full stop. And then, wait until we have a bit of a sell-off, as in even more so. So for those of you who are still sat on the sidelines, let's zoom in here. I see, so this is Bitcoin. We expect a bit of a pullback, maybe up to the 6,400, but we're most likely going to see further falling to the south. And then if we're looking at Ether, so bearing in mind I'm expecting this, I would probably stay in Fiat for the moment if I were you. I'm personally in True USD, but let's have a look at this. Ether's not really the same picture. Hell, in the short term I see 180 easily being hit. There's a 95% probability that the 180 level is going to be hit again. But if we do have this capitulation sell-off, we could possibly see Ether at 100. Possibly. So, I hope that makes sense. Okay, so what am I going to do? I'm in True USD at the moment. I'm still looking, basically we've just added a leg because I'm out of Neo into gas into Ether. I'm going to get back into Ether once we have this bit of a sell-off. And then once we get into Ether, I'm going to keep an eye on that gas Ether level here. Because when everything falls, I mean, this probably goes sideways or up and down a bit, but eventually when Ether gets its feet on the ground again, this is going to fall. It's going to hit my target 0.016. Then I'll obviously go back into gas, so I'll have more gas, and then once gas hits 50-60% of the ratio of Neo, back into Neo. So that's my game plan. So hopefully that makes sense, and sorry that I rabbited on. 13 minutes. Cool, let's go. Bye bye.